Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing? It's December already. You believe that? Hey, we're financial advisors here at Jazzwell. Hope you're having a great day, a warm day, a holiday spirited day, right? A little chill in the air. Get that sort of Christmas time mood going there. It happened for me today. I got in the mood. Hey, while other advisors are playing checkers, we are playing chess up in here. And sometimes the answer is not what you want. Sometimes a client will go way against our best and most quantitative advice that we can give. Quantitative? And, well, the answer is you got to go. You know, that's a tough one. Pains me to say that, but if you won't follow the advice that you're paying for, then there's no sense in paying for it. So sometimes we've got to kick people out in a nice way, but you know what I mean? If you're going to go against the grain and spend all your money and not do anything good for it, well, that's just not going to work. Anyways, I hope you'll check us out at jazzwealth.com. Not the best marketing there, I get it. Anyways, our Wine and Wealth, last week we talked about donor advised funds, got a lot of good feedback on that, got a lot of people thinking. That's all I want you to do is just think about what the possibilities are to put a few more dollars in your pocket while helping out if you'd like to do that sort of thing. Our Wine and Wealth this week is TBD. I actually don't know. I've got a few ideas. I just haven't really put anything down just yet. I'd like to remind our clients that the end of the year conversion deadline is not the end of the year. So the brokerage firms need time to get this stuff ready. So the end of the year conversion deadline is coming up quickly. So make sure if you're going to be doing that, we get that all set up and running there. All right, as far as the stock market goes here today, you notice it? I mean, it was higher, right? But you notice it quiet down just a little bit. That's going to happen more and more each day. So as we get closer to the holidays coming up this weekend here, expect the markets to slow down, do their thing. Now, it doesn't mean we have to go lower or sideways or whatever. We actually went a little bit higher here today. Housing starts were the main economic focus that came out today, and they blew it away. Think about this. Housing starts, they beat expectations by like 200,000 starts, all right? Who's buying these houses, right? And so there were that many more people that wanted to get started on a house being bought. There were that many more builders that said, if we build it, they will come. And they were willing to take that risk. Really pretty cool there. That number came out a whopping 15% better than expected. So when you look at some of these econ numbers, it's not so much what the number is, it's a matter of how off was the number. How much greater was the demand or how much less was the demand? And that was a pretty impressive number, so that helped solidify our sort of starting point a little higher here today. The stock market is now up, well, this is 7 weeks worth of gains, going on 8, technically. We finished this week. We'll have 8 weeks worth of gains there. We've had 8 days. This is now our 9th day up. That's not a record, but it's still really impressive. You got to get into the clear double digits before we set a record. I believe the record on the Dow is 12 days. The S&P, I believe, is also 12 days. I could be off on that one. But the key thing to note is that as we get into this, you're going to see more narrow range days. Just a little bit up, a little bit down, whatever happens. Expect that quiet. Expect people to kind of go away for the holidays. That's totally cool. I'd like to actually start by focusing on the Russell here. Not quiet, right? At one point up over 2% for the day. Very extended, very overbought, rapidly catching up to the S&P for second place year to date. This sucker was dead last for the majority of the year. It's catching up. You got over a 13% rally in just 30 days. All right, so that is the best performer over the last 30 days. Quite impressive there. If you look at the S&P, we talked about that already. Volume still light, and I mean, it was average, but you could just feel it, right? It was just that slow kind of activity today. The Dow gets all the headlines because it's got a big number in front of it, 236 points putting up on the day, and even Bitcoin, chaos back there. Even Bitcoin higher on the day, but that is, of course, much higher priced, and moves are not as impressive there. I don't really follow Bitcoin much. Anyways, if you look over at gold, we're continuing to work on our recovery from the big middle finger there. Remember, gold makes these big shots and then gets quiet. Trading in a range, it'll fall down and then get kind of quiet. It'll spike up real quick and then get real quiet. So that continues there. If you look at the price of oil, that's continuing to move higher. We have some problems overseas, in particular the Red Sea there. Expected to add about $1.50 to $2.50 per barrel is what the consensus is out there for analysts. Ships are already being rerouted and everything, and I suspect there'll be a diplomatic agreement coming up here rather shortly. I don't think it'll be a long, drawn-out thing. It'd be different if this were the Straits of Hormuz, right? Remember that? It'd be a whole different environment. You'd see some activity over here in oil like you haven't seen before, but that's not the case this time, so it's not, I don't want to say it's not a focus, but it's not as nerve-wracking as an issue that otherwise might be pointed out. And if you look at bonds just a little bit higher here today, very slow and quiet. Why would they be slow and quiet? What news is there, right? What do we have to go on now that the Fed has made their last announcement of the year? And so that's what you have. Well, going back to the S&P here real quick, you have a question to ask yourself. Remember, if you're investing for yourself or someone else is helping you or you're a client here at Jazz, the focus is on risk to reward. It's always risk to reward. Remember, I can't speak for other advisors actually, but our company is here, marketing every day, just helping, trying to teach you guys. But our company only grows if our clients' accounts grow, right? It doesn't do us any good if we just start falling apart with the market, right? So realizing that, we obviously want to constantly measure risk to reward. If you're investing for yourself, you are constantly measuring risk to reward. If you're a day trader, for goodness sakes, if you're not measuring your risk to reward, how could you ever know if you're successful or not, right? And so when you look at the S&P here, now we find that even though things are good, and I'm not saying we fall apart or crash or anything, for a new investor to get started here, or someone who wants to commit large sums of cash to the market, I don't think a lot of you would disagree, but is there more risk or more reward? Or you could even tell me it's 1 for 1. We likely go up 10%. The probability is just as good that we go down 10%, right? That's not great, right? We want there to be a skewed risk to reward. We want the opportunity to believe that there's more meat on the bone than the risk that we're going to take. And so that has a real consideration there. We look over at the overbought, oversold stocks that I show every once in a while. This is the S&P 500. It is the percentage of stocks that are overbought on the world's most basic technical analysis there. And we say 72% of all stocks in the S&P are overbought. Is that number high or low? 3% of stocks are oversold, meaning still discounted or oversold on a price basis, right? So if we look back, we can see that the S&P, and I've shared this numerous times over the years, right? It doesn't like to be overbought. The risk is that all of these overbought stocks could potentially pull back, right? The reward, what do you expect? You think they're going to get even more overbought? Right? How often do we get 80% of the S&P overbought? Granted, I know I'm only looking back a year in this case just to make it clean. But how often does that happen? It doesn't. That's not something that normally happens. So you're asking those 72% of the stocks in the S&P, with what great move they've already had, you're asking them to continue to do more when historically that doesn't happen. It's not in the cards. And so you got to be careful about putting new money to work for fear of missing out. That's how they get you, right? They always say, like, the second you think, oh, I'm going to get in, you just guess the top of the market. And they say, you can't guess the top of the market. Yeah, you can. You put the money in, somehow that ends up being the top of the market, right? So think of risk to reward. I want you to really focus on that. This year, year to date so far, there's only 2 sectors that are still negative for the year. You'll find a few of your oversold stocks in these sectors. Consumer staples, you could use the XLP to take a look at the holdings, or utilities, still negative. Utilities down about 6% year to date, although obviously big rally comeback here since we found out about interest rates there. The XLU, or utilities, has recovered about 3% just in of the losses in just the last 30 days, which is fast for the utilities. That's definitely a quick one. Real estate is your leader, though. In the last 30 days, there's no sector that's gained more than the real estate sector. Very few stocks in that sector, very low participation rate in terms of market cap percentage in the S&P. Yeah, but still, it's up 11%. It's the only double-digit gainer in the last 30 days. You'll find a handful, very few overbought, oversold stocks there. So just ask yourself, before you commit, is the risk greater than the reward? Or, based on whatever belief you have, is the reward potentially bigger than the risk? All you have to do is justify that to yourself. And right now, I don't know how many people can justify that there's more reward in the stock market going into the new year and all of that than there is risk of a pullback. So be very, very careful. All right, a few stocks in the news, and I'll take your questions because there's not a whole lot else that I think you probably want to focus on here. Boeing is the first one here. You see that? a V-shaped, kind of looks like a little airplane taking off in a way. So a couple things here. Lufthansa. They're going to spend $9 billion upgrading their airplanes. Boeing gets a lot of those. I think it's about 100 or so planes, but Airbus gets some of those as well. So if you're an international investor, they're going to be getting some of that $9 billion. Also, Lufthansa, I was just looking around, a little bit bored and looking around. They're starting to fly to Israel again. I mean, some of the others are as well, but that was cool. Something doesn't make headlines too often. Nonetheless, Boeing is obviously recovering after a couple of years of having some troubles there, right? Enphase, some of you that have played the solar stocks for this year, a nice recovery and continuing to recover off lows. It was almost a 10% day today because they're going to reduce their workforce by 10%, which means more potential cash to shareholders, which means a lean, more mean fighting machine for their business. Now, that did help the other one too. SolarEdge, right, coming off bottoms. A lot of these looking like they're trying to show you a little hint of a bottom, but that was the news for them. Alphabet settles a deal in no, it's the U.S. A $700 million settlement there for the U.S. antitrust lawsuit. And so good for them. Stock was up just a little bit better, outperforming ever so slightly. Tomorrow, look at this, Winnebago. With the campers, right? The RVs and stuff. You would think that they would have struggled more than they have over the last year or so, but no, that's not the case. Anyways, they've got earnings coming out tomorrow, and I pointed out because they trade lower on earnings more times than not. So of the last 8 earnings report, 6 of them, the stock traded lower. 6 out of 8 times, the stock actually trades a little bit lower. Hey, earnings-wise, that's pretty much it. You got General Mills. If you're interested in that sort of thing, they're going to report earnings as well tomorrow. It's a 50-50 shot. Pretty much stable, steady consumer staple stock. So not a whole lot going on over there. Do we have a leaderboard?
We do. Yeah, your fresh leaderboard. We got Lene, Bristol, Bruce, Ted, and Hannah. There's Bruce again. Twice in 3 weeks on this board, maybe third straight week on the board, finishing the year hot.
Bruce in the mix there. Tell me about that hat, big guy. What's going on with that hat? It looks sharp.
We got a little Jazz Wealth hat action going on here. You can't even see it, I don't think, but yeah. It's a really comfy hat. Maybe the most comfortable hat we've ever had. You know,
that sounded very Trump of you. It's a comfortable hat. It's probably the most comfortable hat.
That's my new thing. Yeah, everything's the best.
The best. Yeah, we thought, hey, let's make some hats. So we made some hats there. They're not for sale or anything. We just, if you come by, you know what I mean? You come by, we'll say, hey, how's it going? Maybe you get a hat. But let's take some questions here because that is all that I have for you here today. Remember, the week will be getting quiet. It will get slow. And then next week, everybody's fat and happy after Christmas, the holiday there, getting ready for the new year, prepping their fireworks there. It will be probably pretty quiet as well. Serby says, in January, positive month for the stock market. I'll tell you, the first trading day of the new year, which will be January 2nd this year, the first trading day is always the most volatile day. I'm not saying it means up or down. It doesn't really matter. Just range-wise, lots of volatility on the first available day of the new year. I've shared that at some point, and it's probably still in my slides. You look at volatility by day of the year, the first day, always the biggest there. And then probably over the holidays there, I'm going to be cleaning up my slides. So I have, not actually, 288 slides that I've shared here. I've deleted a lot of them, but I'll probably do some kind of live thing while I'm just hanging out, and we'll talk about them as I clean everything up if you're interested. Yeah. Oh, yeah. That's right. Company grows as customers add dollars to yeah, I mean, that helps. But if those dollars are invested at the wrong time and they start to fall apart, where's the benefit? You know what I mean? Which is what I love about it. Because if you put dollars in, that means that I know that's a new dollar. I want that dollar to grow. If that dollar grows, that means we make money. And I'm not shy about saying that. I mean, we're very competitive, I think, out there. But of course, we want to put our sort of interest in the same spot there. It's the way to go, man. Yeah. Grinding Retires had a few busy months there. All right. Now it's time. Now you got some time off there. A little break, maybe. You got OGN. Well, yeah. So these are tough. This goes into, I know it's different, but this goes into like the Enphase and SolarEdge and stuff. It's like, ooh, it's been some There's been some people burned here. It's kind of hard to convince, although out of the last couple of days it looks okay, but it's hard to convince people that, yeah, you want to buy it here and we're going to make this thing take off again. I like a good pullback. I don't like that kind of pullback. As far as trying to take a shot, that now's the time I should put a lot of money in there. How many years till you see the mortgage rates in the 3s or 4s? Who's to say we would ever go back to the 3s or 4s? Would we? Why do we need to go back there? Remember, interest rates were that low, even lower, because of chaos. You need chaos. The rates aren't just going to come down just for the sake of always having cheap mortgage rates. That was historic. A historic thing there. Seems like time to just sit on your hands for the rest of the year. I would agree, Tom. Yep. Now, individually, stocks can participate. Like, check this out. Today, you had basically 65% of the S&P had a gain or a loss between 1%. So 200 plus stocks in the S&P, right? Well over that, 260 something stocks. You could say didn't have a loss greater than minus 1% and didn't have a gain of greater than 1%. They were all in that range. That's a sign of a stock market that's like, hey, we're sitting on our hands. Now, there's individual stocks, of course. We looked at a few of them, the solar stocks there, Boeing and things that'll have their excitement, but it's not as much. Yeah. LHX, tell me. I don't know. What's the question? LHX. Obviously participating in the rally, all's looking good here in the short term. I just make the same argument, right? If you own it, and by chance you happen to have some kind of a profit there, or you just recently bought it, how are you not enticed to take a little bit of profit? Maybe not right now, but January 2nd, when you can move the tax in the next year. Same thing here, though. Risk to reward. Is the reward that you go to 235 just as fast as you got to 210? Or is the risk that more likely you see a pullback? Oh, I think more of a pullback there. Hey, FedEx had their earnings after hours. Yeah, that's right. Pretty good drop, right? Where are we at? 250. So we're down in here somewhere for FedEx. There's your risk to reward, right? Solid move up higher there. I haven't looked through their earnings yet, so I can't tell you what's going on. But obviously the risk. No tax harvesting for you this year. Take it after the next year. Yeah. Then not a lot of tax loss harvesting to have. This is a tax gain harvesting type year. So it's a different focus than what we had last year. Last year was the first December we were down since 2018. Right? Other than that, you know what I mean? Hard to do any tax loss harvesting. Short squeeze on Chewy. Yeah, probably, huh? Yep. And we'll probably do that the rest of the week, Caitlin. We'll take a look at some of not only the market indices like the S&P, if it has 20% year, what tends to happen. We'll go further than that, and we'll look through the different sectors. Because some of the sectors not only have had great years, but have had great recoveries off their lows. So we'll dig a little bit deeper on things like that for you. I love it. Yeah, go check out the FedEx earnings there. I haven't had a chance to look, but it ain't good. You kind of guess something happened there. All right, I'll go check that out. You guys enjoy the rest of your day or evening. Appreciate you hanging out with us. Remember, sit on your hands. Careful. Don't get caught up. It's been a good year. Don't screw it all up right at the end. All right, see ya.
Fernsehsköter.